When is this market gonna finally roll over? Picking market tops is a great way to blow up an account, and I'm going to address that in today's video. We're going to talk about the market moving higher, what it's telling us, the different patterns that we should be looking for when the market finally does hit resistance. Yeah, there are plenty of reasons to be bearish right now. There's global economic weakness. The tariffs that have been instituted are finally in place. We haven't even seen the impact of that. That has caused all of this front loading of demand. We had a very weak jobs report, huge downward revisions. We had a weak ISM manufacturing report. ISM services this week was almost in contraction territory. So there are a lot of reasons to be bearish on the market right now, but they're all fundamental and none of them are technical. And I've been through a number of these in the past, and the issue is that every little dip looks like it could be finally the market rolling over. So if you were bearish in here and you had this little dip, oh, here we go, this is it, I'm going to get short in here, and the market rebounds and continues higher. Another little dip in here, oh, for sure, this should be it, marginal new high. This looks like a good place to start shorting. Market gaps higher and keeps on going. This little drop that we had after the jobs report, I came back from vacation Monday. I thought, wow, that was a really nasty jobs report. And it turns out that we had 19,000 jobs in May, horrible number. 14,000 jobs in June, 77,000 jobs in July. That number could be revised lower. I thought, okay, well, this could finally be the crack in the dam. And then Monday, we came in, market rallied all day. Okay, Tuesday, we had a really poor ISM services number. 80% of the economy is driven by the service sector. It almost fell into contraction territory, 50.1. Very weak reading. What did the market do? Continued to march higher. We do also have seasonal weakness coming up right now. But here's what's happening is every time that shorts come in and they start to take positions, the next little market rally squeezes them out of those positions. They have to cover for a loss, and that fuels the next leg of the rally. And you don't ever really know when the market is finally going to run out of gas. We've had a lot of news recently. We've had earnings reports. We've had economic reports. We had the FOMC statement. FOMC statement, by the way, FOMC has been relatively hawkish. Are they finally going to reduce interest rates in September? If we take a look at TLT last week, bond yields are going up, not down. Well, that's not consistent with a rate cut in September. Why is that happening? So if you look at TLT, you'll see that it's recently broken the 100-day moving average. So to keep on topic, what we need to have are signs, concrete signs that the market is finally going to roll over. And I'm not seeing any of those signs yet. In fact, if you look back, you can see since the low earlier this year in April, how many times have we seen back-to-back declines of any magnitude? And so if you look for two red candles, there's two. No, that wasn't a big sell-off. That wasn't a big sell-off. That wasn't a big sell-off. You barely see any of them, and they certainly aren't two long red candles in a row. This was the closest that we've come, and the market rallied right back. It's not ready to roll over. So what are we going to be looking for? And let me tell you that I've seen this type of price movement. Sometimes this leads to a buying climax, and the market can shoot a lot higher. It would surprise me if that happened right now, but I remember from 1997 when we had a very, very overvalued market, just like we do now. The market continued to rally for 2 more years after that. And every little dip, every little top that looked like it was going to finally gain traction was gobbled up, and then it forced this short covering. So these are the signs that we're going to be needing to watch for over the course of the next couple of weeks. We want to make sure that this high is firmly intact. The types of formations that I like to look for, first of all, a gap up to a new all-time high. Do not chase those, because those are often going to turn into gap reversals. And you know that from my last video. those gap reversals have a lot of room to move on the downside and the momentum builds. And what you want to see is the market opening on its high of the day, closing on its low of the day in a nice 45-degree angle all day long with steady selling pressure. So let's take a look at what we had. And there's a gap reversal. So this is the type of price action that we would be looking for on heavy volume. This actually looked pretty encouraging. The only thing that I didn't see was nice price action with lots of lower highs without any green candles. So you can see that there were still some nice bounces, which tell us that buyers are still engaged. So you want to see the market gap up, and then you want to see just stacked red candles throughout the entire day. Market can't get off the deck. Ideally, it takes out the prior day's low, which you can see would have been down here for this day. Take out the prior day's low and maybe another support level, leaving this gigantic bearish engulfing candle. Now, if you see that, you're very likely to see some sustained selling pressure for at least a few days after that, at very least. And we can go back on a daily chart, and I believe we had a situation like that. Not last year, it could have been 2 years ago, where the market culminated with a nice long red bearish engulfing candle off of a relative high. I don't know that I'm going to be able to find it, but you can see off of these new all-time highs, that's where you get that type of gap reversal, and then you get the follow through. Same thing in there. That's how these bullish rallies tend to end. There's another instance of a relative high, gap up, reversal, and there's your follow through selling. So if you go through on a chart, you can see these points right in here. That's the candle I was looking for. That was July 27th of 2023. Market gaps up to a new all-time high, and it takes out the previous 3 or 4 days of support. So yes, there you get follow through selling. So that's one of the patterns that we're going to be looking for. We want to see that gap up, and we want to see that huge bearish reversal pattern with the market closing on its low, very heavy volume, S&P down 100, 120 points. That would be a sign of significant profit taking. The other thing that we'd like to see is some weak closes late in the day. We haven't seen that. We've seen more strong closes and buying at the end of the day. So when we start to see days where the market looks fairly strong during the course of the day, and in the last hour or two of selling, you start to see the market really lose its bid and sell off pretty hard. That's a pretty decent sign that there's some profit taking and there's some weakness in the market. So those are things that we're going to be watching for. And ultimately, you can't really even short that first pullback. And that's what everybody wants to do, is they want to short that first pullback because you want to get in early. You want to get your puts before the market actually rolls over. Well, what we need to see, and one of the reasons that the market feels like it's going to go higher this fall, is that we're not seeing any long red candles at all that have any type of follow through, and the market has been able to rally well above the major moving averages in here. Now, call a spade a spade. I have not caught this move to the extent that I should have, because I've been very skeptical of it. I've seen these tiny bodied candles. I've seen this float higher on light volume. I'm watching all the fundamentals, the macro fundamentals. I'm looking at the tariff news. So yes, I have traded to the upside, but I haven't taken a lot of bullish swing trades. I've been keeping my trade duration very short. I plan to continue to do that. And what will ultimately happen is you will get a nice big crackdown, perhaps to the 50-day moving average. If the selling pressure really accelerates, we'd like to see it down to the 200-day moving average. That would show us that sellers have finally stepped up to the plate and that there's a lot of profit taking. I believe that for us to see that type of movement, we're going to need to have some really bad news. Something's going to have to really shake the market. And the next big news that I see coming up is the Jackson Hole Symposium towards the end of August. So we still have a few weeks before we see that. And it would also take some fairly hawkish statements from Powell. Yes, that's the type of thing that I think could really rattle this market. But until then, and until we see a nice deep decline, what you would see once that top is in, you get that first initial drop, and then you get a wimpy bounce that can't get anywhere close to the previous high. And the reason that that double top lower high is so important after a nice deep dip is that sellers are telling you that they don't believe the market is going to get back to the all-time high, and they're going to start getting aggressively short before the market even gets back to that high. That is where you can start taking some bearish positions, some bearish swing positions. But we're not anywhere close to that right now because every dip has been brief and shallow. What does that mean? That means that buyers are still engaged and that they see every pullback as an opportunity to add to long positions. That's what that price action tells you. So you get a little dip, buyers come in, they scoop it up, and they run it to a new high, and there's some short covering that fuels that leg of the rally. That's the state that we're currently in. Are there going to be shorting opportunities right now on an intraday basis? Absolutely. I'm starting to see some really decent day trading shorts. So if I had to balance things out, I'd say probably 1-to-3 ratio. 1 short to every 3 longs is kind of how you would have your mix if you were swing trading. But definitely you would want to be biased to the upside. So tread cautiously in here. I think that the closer we get to that August symposium, the Jackson Hole Symposium, the more risk starts to come in. But right now, I'm not seeing anything that tells me that this market is ready to roll over. And here we had a day right here with the ISM services number coming out very weak when we could have put in that lower high and the market could have come down to that 50-day moving average. Boy, that would have told me that we finally might be seeing signs of resistance, but the market bounced right back. So I'm going to be taking a look at my previous pick. It was PLTR. It was back in here. It was just after the earnings announcement. I did the video on Wednesday. I told you I like this. I wanted to try and get a bullish put spread off. I don't know that that spread ever came into range because you can see that the stock continued to move higher. So yes, I like it on a day trading basis. Absolutely. You've been trading it in the chat room. Today's pick is going to be similar. If we have any kind of little pullback, we would like to see this stock pull back so that we can sell a bullish put spread on it, but it's also going to set up pretty well for day trading. Issue with the stock I'm going to show you is that it's fairly expensive. So I'm going to show you a few others in addition to Netflix, but I like Netflix. I like what I saw out of the stock. Let's zoom out a little bit. You can see that was earnings after the close. The stock sold off and it found support above the 100-day moving average. So it had this nasty little red candle and it was engulfed the next day. And we've seen some follow-through buying. Now, the stock does have to get through the 50-day moving average. And what we'd like to see is we'd like to see it do it when the market is relatively flat. Why? Well, if the market is up really strong, all stocks are going to follow the market higher. All ships rise with the tide. What we'd like to see is that relative strength that we saw on Friday is there even without the market running higher. And this stock actually is kind of a flight to safety, by the way, because it's kind of on an island. It does its own thing. It's got great content. It's been able to grow its subscriber base. Are people going to cut back their $11 a month expense? It's cheap entertainment, even if economic conditions start to falter. So that's kind of the situation that I've seen with Netflix over the course of the last 2 or 3 years. Market pulls back. This is one of the stocks that continues to forge higher. You can see on this initial rally here, On Friday, lots of volume. That's what we like to see. Also, the stock has pulled back after earnings, so we don't feel like we're chasing new all-time highs with this stock. We also know that it has some room to move to the upside, so that's also nice because it's well off of its all-time high. How would you play something like this? Well, you get this initial move higher. You do not want to chase these steep early moves. This is unsustainable. Only an idiot would expect it to continue on that path higher. It's going to pull back. So you have to wait for that pullback. And now it pulls back. It finds support right around VWAP. When it gets back above VWAP and you have relative strength, this is your entry point. Not here, not chasing. Now, of course, if the stock opens flat and it doesn't have stacked green candles on the open and it's got nice relative strength, let's say the market is down, market's selling off, stock opens flat, and you start to see that relative strength, market puts in a nice support level, it's tested that support, market looks firm, market's starting to rally, stock has already demonstrated relative strength and some decent volume, then you know that you're going to have a nice entry point for Netflix, because if the market does bounce, which it's tended to, it's going to act like throwing fuel on the fire, and that's when Netflix is going to take off. And that's exactly the type of price action that we saw on Friday. Stock closed on its high of the day. I like Netflix. I think that's going to be a really nice pick. If you have an opportunity and there is a market pullback and the stock dips a little bit, you can see that we've got support here at AVWAP-E, the red line, and we have support at the 100-day moving average. I would like to sell an out-of-the-money bullish put spread keying off that 100-day moving average, and you can see that comes in at 1136. So if you can sell an 1135, 1130 bullish put spread, I'm going out to September 5th. And my reason for that is that we've got a holiday in there. So the holiday tends to take a lot of the action out of the market. And if we go down to the 1135, 1130 strike price, we will see what that's currently trading for. So we've got, sorry about that, I'm in the wrong series here. So we've got the 1135s and the 1130s, and you can see that spread is offered at $2.20. The bid-ask spreads are a mile wide. So this is one of those instances where you have to draw a line in the sand. You have to decide what price you'd be happy with, what you believe the stock will do, and what you believe it will not do. And then you put your dollar credit out there and you see if you can get filled on it. Maybe initially you try and do 5 contracts. You get filled on 5 contracts. Hey, I like that spread. I know it's there now. Maybe you try and do 5 more or 10 more and you build a position. Again, watching to make sure that the stock has preserved its relative strength versus the market, and that the market is not showing you any signs that it's going to be rolling over. So those are the only conditions that I really would be doing an out-of-the-money bullish put spread or a swing trade on right now. I want to do it on the strongest stocks, and I want to keep my duration somewhere inside of that 3-week period. Certainly, I'd like to stay inside of the FOMC meeting in September, because that could be very big news for the market. If the Fed does not cut interest rates, I believe it's going to be a shock to the market. I believe that a rate cut is priced in right now, and that's why the market has been able to rally on bad news. Bad jobs report, no problem. The Fed has plenty of breathing room. Bad ISM number, no problem. Hey, the Fed's going to rush to the rescue. They're going to start cutting interest rates. One thing I will also mention is that be careful what you wish for, because when the Fed starts to cut interest rates, it's because they see economic weakness, and they are much more fearful of economic weakness than they are of the threat of any tariff-related inflation. And that's why they've stayed at higher interest rates for so long. Almost every other major country in the world has been easing. These central banks have been easing for many, many months. They're much more worried right now about economic weakness than they are inflation because of tariffs. So once we start to see any kind of crack in the price action, again, we don't have to watch the fundamentals, we have to watch the technicals. So watch for that gap reversal. Ideally, the market never gets back to a high right now. And that would give us our lower high double top. And maybe we get a nice long red candle this week. AVWAP-Q on SPY has to be obliterated. We've got to, at minimum, get down to the 50-day moving average. And then we have to struggle to bounce off of that 50-day moving average and then put in another smaller high, lower high. Then I could start to say, all right, now I'm finally starting to see enough signs to where the market looks like it's going to roll over. I'll start considering taking some bearish swing trades, but not until then. So stay bullish right now. Focus on the long side. I'm going to look at a couple of other stocks. Another one that I really liked was there was a beautiful little breakout on VKTX. Earnings right here. Nice little price compression. You can see this breakout above the 200-day moving average. So let's zoom out a little bit. You can get a longer term view of this. I like this little breakout, and we did have decent volume on Friday. So there's your volume. I like this stock. Would I sell out of the money puts on VKTX? I'm looking at it more for day trading, very short-term trades, maybe call debit spreads. Why wouldn't I sell a bullish put spread on this? Well, it's a biotech company, and they really have one drug, and it's a weight loss drug. It's in phase 3 trials right now. So if news comes out this way or that way, the stock could really drop hard and fast. So I'm not a huge fan of selling out of the money naked puts or bullish put spreads on biotech stocks, especially when they only have one or two products and when those products have yet to come to market. So there's a lot of risk on that. But I do like the breakout. PLTR, I still like it. NVIDIA is coming up on earnings. I still like that price action. Apple, I like this breakout on Apple. I like Google too. I like this horizontal breakout on Apple, but you can see how far the stock has moved just recently, and it's well off of that EMA 8. I can't buy Apple until it comes back and checks that 200-day moving average. So down in there, yes, I'd be much more interested buying that on a retest and a bounce off of that support than I would be chasing it here. Google, let's take a look at that one. Google also marching higher, really nice relative strength. Beautiful little breakout there on Friday. There you go. There's your rally here. Find support at VWAP. You do have an opportunity to get long in here for a small gain. Nice, heavy volume. So I do like Google as well. And one more look at Netflix, because that is the pick that I'm highlighting today. And you can see how the stock really ran up. This has been a very popular stock. Now it's got a little bit of a dip, so that gives us this upside from this point. And if it's got relative strength, we know it's got plenty of room to run. I would love to see it attack that 50-day moving average, because if it can get through the 50-day moving average with ease, it's probably going to continue to rally up, and it'll eventually challenge that all-time high. So that's your pick of the week. Most important messages. Number one, do not chase gaps up on the S&P 500. Don't do it. You're going to see some profit taking, and some of those are going to turn into these nasty gap reversals. You could take a lot of pain on that almost every gap up. I can go back and show you the charts over the last 3-4 weeks. Almost every gap up to a new high has reversed. You've seen at very least a little bit of a dip. Those early dips are fantastic because they allow us to find the stocks that have the best relative strength. And then when the market finally does find support, we already know which stocks we want to focus on. So wait for that technical breakdown. And for swing trading, it's not just that initial sell-off. We need to evaluate how deep that drop is. Was it deep and swift? Yes. Good. Then we know sellers are in control. Now we're waiting for a wimpy bounce with a lower high, double top. Then we can start taking some bearish swing trades. So a lot really has to happen for us to get fairly aggressive on the bearish side. Until then, we try not to rationalize why the market is running higher. It's one of these plug your nose and buy type of situations. If you get a dip early in the day, fantastic. That is our best opportunity because you get that early dip, you get that early support, you're able to buy, you're able to find stocks with relative strength, and you're able to join that longer term market uptrend. Almost all of these have been gobbled up just like they were last week. And so now all of a sudden you've got some decent day trading opportunities. So that's the best setup that you can possibly have right now, is a dip that finds early support and get a gap up, wait for that dip. If you get a gap and go and the market never looks back and it keeps on going, you have to be willing to just let it go at this stage. It's just not worth the risk reward to chase a gap up and go. Even if you get a gap up and go, most of those moves run their course in the first 90 minutes of the day. You are going to get a pullback in the middle of the day. That pullback needs to be brief and shallow. Market needs to find support above VWAP. Whatever news it was that got everyone so excited, if the market finds support above VWAP, that's your entry point. So you'll always have an entry point. Be patient. Thanks so much for watching. I'm going to be doing a live event with Harry this Wednesday, so make sure you tune in for that. Please make sure to subscribe to the YouTube channel and turn on your notifications. I'm trying to teach as many traders as I possibly can, and by you subscribing and giving this video a thumbs up, it's going to help me do that because my videos will rate higher. Thanks again so much for watching. Please let me know, what are you trading? What have you had success with recently? And I'll reply. Trade well. We'll see you soon.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.